Let's get some analysis, and we're joined by Evan Lucas, market strategist at IG in Melbourne. Evan, good to see you there. Okay, so we had a rival proposal come, that's been rejected, and now we're hearing that the US Senate talks have been suspended. Doesn't sound good, and the losses accelerated into the close, and now we're hearing that Fitch has put the US AAA rating on rating watch negative.
Yeah, they actually probably had that already, Bridie. That's a quite interesting comment. They're just basically putting the market on sort of notice that they are actually ready to move if they have to. I doubt they will. Look, we're back on the roundabout. We go back full circle. I think you've got to look at it now that they are actually very close to a deal. Despite what you saw today, the breakdowns in the Senate came down to the whole idea is that, okay, this is the deal that obviously Reid and McConnell sort of nutted out. We know what it is. There's a timeline to it. There's a raising and opening of the government, raising of the ceiling, all that kind of stuff comes about. What they did put on hold today, and that certainly was what you can see coming out of the Democrat side, was that they're actually not communicating between each other very well either, and that's the other issue that comes with this. We've now got a situation where they went, okay, hang on, let's see what the House will actually approve and what they'll pass. Let's put the Senate negotiations on hold and move from there. And that really did spook the markets because we are now inside 30 hours, so we are getting very, very close to the wind in terms of where we're at. Having a look at it, it's what's going to happen now from what we can see from the deals coming out of the House rather than out of the Senate is that back to what the original sort of a deal was coming out of Harry Reid, which was a very short-dated idea. So that is moving everything to basically the 15th of December. So the debt ceiling would be raised through to February. That would be the only thing. But the funding of the government would be through to the 15th of December. And also the Budget Committee needs to actually meet and agree on something by the 15th of December as well. So that's the change. It does sound like something will be done. So I know there's a bit of spooky on the markets. We did have a fall last night, but we are very, very close to a deal, which is good to see, even though there's more rhetoric. It'll probably go all the way to almost the 11th hour, but there is a deal there. It's just a question of timelines now. Everything looks like it will go through. It also comes down to whether or not there's little parts to it, like whether or not they actually fund their staff on that health fund side, or whether they get removed and put into the whole idea that all of the public sector will have their health fund stripped back, which is technically probably a pay cut. So that's also on the issues as well. But all in all, it's just a messy situation. It really does mean after 3 days of rallies, it's another way to sort of see it as an excuse to take profit, Bridie, as well. So it's been an interesting trading session over in the US. They've been up 3.5%. So to see a bit of a pullback over, this morning is not unsurprising, and the violence of it also not unsurprising, considering that we're still a little bit way off. But all in all, it does look like a deal is not far off. They're just as usual. They are enjoying sort of probably, hearing their own voices rather than actually getting on with the deal and doing something very, very quickly.
It's interesting you say that, because just as you were, we saw a flash from Reuters saying that President Obama, in an interview with WABC TV, said his expectation is that the fiscal impasse will be solved, but there's not much time. There you go. Let's have a look at some of the production updates. Of course, we had Rio yesterday and plenty more today and tomorrow. What should we be watching out for?
Yeah, it's nice to actually start talking about stocks and stock-specific things rather than talking about the political issues over in Washington. Having a look today we're probably watching Iluka. Iluka's a very interesting little stock at the moment. Very good medium-sized company. It really does have, a lot of its fingers in the right buttons. We did see a really nice update with regards to a possible takeover in Sri Lanka. It could be around about 46% of their total mass resource they had in 2012. So watching very closely their zircon production. We do want to see the zircon hit roughly around about 280,000 metric tons of zircon. That would be a record for the company. That was their July forecast. We'd like to see that happening, and they did up it from their February forecast, and that's probably to offset a little bit of price weakness in their other major sort of product that they make, which is titanium oxide. Obviously linked with regards to where Iluka is, they link up with things like paint production and all that kind of stuff, and it has been a fairly good year for them, considering the Europeans and also the US are seeing a bit of an increase in that area. So it'd be nice to see if they can reach that numbers. Tomorrow will be a really, really key movement with regards to where we see the Australian stock market, and that is Fortescue. We did see really good numbers out of Rio. They came out very much with that Pilbara 290 numbers that showed that they were ahead of timeline and also budget. It's why they could actually get up there with that record iron ore number and really saw them rocket. Tomorrow's a really key one for Fortescue. This is their key year to making it 155 megatons per annum of iron ore. We want to see FY14 shipments of around about 127 to 130 megatons for the quarter that we've seen. We also want to see capex at around about $1.9 billion Aussie dollars, and that would mean that they're starting to actually wind back a little bit on that debt as well. If they can get all that in order, it will probably see Fortescue really moving further forward. If you have a look, the average price in terms of where we see iron ore at the moment, it's held very, very strong at around about 136 US dollars a tonne for the full year, and that would be a very good thing for Fortescue. Be a big key mover, considering that China is still seeing a fair amount of imports of the product. It's all sort of stacking up for Fortescue, and heading into that end of quarter year report will be very interesting to see. So watching Fortescue very closely tomorrow, watching Iluka today, and after what we saw from Rio, you could expect possibly a very good number cutting out of Fortescue tomorrow, Bridie.
Wanted to get your opening call too then for the Australian share market, given we've got plenty to watch.
Yeah, unfortunately, look, we're going to follow the US. Having a look at the SPYs and also the futures of the US futures this morning, US futures plummeted again on the open, so they're down roughly around about 0.6, 0.7 of 1%. We're going to be dragged with it. We look like losing roughly around about 30 points, so around about 52.30, maybe even a little bit lower from what we closed at yesterday. It'll be a very, very rocky couple of 32 hours, 36 hours until we actually get clearance. The time to be watching is Friday, this is for Australia, Friday at 3 p.m. Eastern Daylight Saving Time is when the debt ceiling comes due. So until that's all done, unfortunately, any sort of bottom-up fundamental stuff will be put to one side. It's all this macro noise that we're getting out of Washington. So unfortunately, we do look going backwards, despite the fact that, Rio had good numbers. The production updates look like they're on target and actually are benefiting from what we see in the global economy. But unfortunately, we do look like going backwards, and we'll probably do that all the way through unless we hear something else out of Washington that will reverse that fact.
All right, Evan, we'll talk to you through the day. Really appreciate that. Thanks.
Thanks, Bridie.